I invested every single day for a full year and counting. If you consider that a few years ago I was literally filing for unemployment, long story short, COVID was a weird time. Investing $5 a day is a huge accomplishment for me. Thanks for letting me share it with you, and thank you SoulSearch616 for your super chat. You're too kind. I know $5 a day doesn't sound like a lot of money, but Lincoln is a valued member of the Dollar Bill gang. He's also on the penny, out here working 2 jobs just to keep the lights on. Respect Abraham. Next time somebody tells me that's not a lot of money, I'm gonna Venmo request you for the same amount. You can hate all you want, but the haters never seem to pay me. Oh, I went there. Remember, gang, everything big started small. Keep grinding. And if you want to try something like this for yourself, even if it's just $1 a day, that's within reach for a lot of people without actually going out and making more money. It just requires a switch up in what you're already buying. To make this happen, some people are going to give up Starbucks, some people are going to eat out less. For me, in part, it was giving up those 1 or 2 beers on the weekends with the boys. The hangovers hit harder after 30, lower back pain isn't fun, don't get old, kids. I can still hang out, I just drink a concerning amount of sparkling water now. LaCroix, sponsor me. Also, the math is insane. A couple beers at $7 a piece is $14. Let's say you do that every other weekend in a year. That's $364, or basically $1 a day. Let's be honest, it was never just 2 beers, and it was every weekend. My 20s were a lot of fun, go dogs. But we're all on our own investing journey, so if you're like most people, a part of the
shrinking middle class,
and you're not taking advantage of the markets, this is costing you. We all know about inflation. I'm tired of that word too. Our money is getting less valuable every year, and I'm sure you've heard that asset prices like houses and stocks have gone up. All the house did was bake in the sun and sit in the rain. Why is it worth doubles, Willow? Still waiting for my answer. I'm not saying it's right or wrong, this is simply the way things are. So in order to not lose ground, maybe even get ahead, investing in the markets is one option we have. Of course, getting started is typically the hardest part. They don't teach this in school. I would know. I spent 20 years in Azkaban. Seriously. There are 4 major reasons why people do not invest. All of them are valid, but if you let them stop you, you will not benefit from the market's performance. So I can't give you financial advice. Not qualified to do that. But I can go over why it is so hard to start putting in even just a single dollar into the markets for most people, let alone do it every day. We'll go over what you need to know to get around these 4 reasons. I'll show you my investing results so far from my daily investments, because it's not so scary if you have the information you need and you know that someone else is doing it too. Oh, and I really dragged my feet on daily investing for a long time. So I'll tell you the one simple thing I did that allowed me to finally make this happen. Hi, I'm Raj. I talk about money, and in this video, my money. So the first reason why someone would choose to delay or not invest at all is because you could just put your money in a savings account. It pays you interest, so you are actually paid to keep your money in a bank, and it's the bank. Nobody loses money there. Oh, you think you're clever. First, I'm a big fan of having money in an account for unexpected emergencies. 6 months of expenses, 12 months, 2 years, whatever works for you. However, after a certain point, the money in the savings account can be better used in an investment to get a higher return. In other words, there is opportunity cost to consider. What that means is that if you put $1 into the savings account, the opportunity cost is the value of the next best investment you could have made. For example, if you put in $100 in a savings account and got 5% yearly interest, at the end of the year, you made $5. If you put $100 into an investment that made you, let's say, 6% that year, you made $6. Math. The opportunity cost of saving the money would be the extra dollar earned. The thing is, the interest, even in a high-yield savings account, is not nearly as high as historical returns from the broad markets. You'd be lucky to get a 5% savings account interest rate, and historically, the S&P 500 has returned on average 6.8% a year, even when inflation is factored in. And depending on how much you invest initially, how much you put in every month, and how long you invest, just a 1% difference in investment returns could mean you miss out on tens of thousands, hundreds of thousands, maybe even millions of dollars. Math. I understand though, you don't want to lose money. You might be okay with inflation eating away at the purchasing power because it can be offset by a few points of bank account interest. It's basically risk-free. Well, we know from the past few years that banks can fail, and even though your money is insured with a reputable bank, it's only insured up to $250,000. Anything else above that is technically at risk. No such thing as a free lunch. Reason number 2, you'll invest later when you make more money. Another great reason. If you have more money, you can do more with money. But there are 2 problems with this. One is that typically as people make more money, their lifestyle inflates as well. Nicer car, nicer homes, kids, pets, vacations. Investing for the future is typically at the bottom of the list because other more immediate needs come up. Look, mac and cheese ain't cheap and that's all kids eat. And apparently, you only live once. YOLO! Me, Drake, and Lil Wayne sharing a screen. I made it. Now the second problem, time in the markets leads to compounding returns, and the earliest dollars you put in grow and compound more than dollars you put in later. So delaying investing puts you at risk to not even doing it at all, or you lower your overall returns because of the delay. Now there is a way around this. You can contribute more money when you make more down the line in an attempt to make up some ground. But this is much easier said than done, and typically a more expensive way of investing because the extra dollars don't have as much time to compound. They aren't working as efficiently as early dollars with more experience in the markets. Reason number 3, it's not the right time. Look, there's always a market crash around the corner. In my lifetime alone, I lived through the dot-com bubble, the lost decade, the 2008 subprime mortgage crash, the following recession, 2020. I don't know what's next. But what I do know is that investors who missed the highest returning market days made significantly less money compared to investors who stuck with the markets even during downswings. Missing the best 10 performing days cut investors' returns in half, and that's really important to remember because 50% of the S&P 500's best days since 1994 were in bear markets. History says if you stay invested in the right assets, you are rewarded. When a market pullback is happening and the media is telling you the sky is falling, it's all over, remember the data is the data. We made it through every major market dip and the markets eventually went higher. Reason number 4, investing is too risky. Yes, investing has risk. So does getting in your car every day, but we follow the rules of the road and wear our seatbelts. This allows us to get to where we need to be and do the things we need to do in the least risky way possible. There's only 2 things you can do with risk: take it on and minimize it. One way to reduce your risk in investing is sticking to tried and true investments that work for the long term. One of those is the S&P 500, or the 500 largest companies in the US stock market by market cap. This is effectively the benchmark for investment performance. Investors who put their money in the S&P 500 over a 20-year period did not lose money. The historical returns do have large drawdowns, but you can clearly see in general there is more green on the board than red. Look, I'm gonna let you in on a little secret that almost nobody here on Finance YouTube likes to talk about. There are downsides to investing in the S&P 500. I know, I'm saying it out loud at great personal risk. The comment section is about to be lit. I will make that video for you if you want it, just let me know. But the data is the data. It's very hard to beat the market, and on a long enough time period with consistent investing, this is historically a proven way to grow your money. It doesn't involve penny stocks, crypto, or high-risk investments. Now, I know all of this can be overwhelming, so let me just show you how easy this can be. My own daily investments are going to look a lot different than most people's, and that's okay. It's personal finance. You can do whatever you want. If you want to keep it simple, consider the ETF VOO. ETF does not stand for Eat the Flamingo. It does stand for Exchange Trade Fund, and basically instead of buying all 500 of the top US stocks individually, you can just buy VOO and it holds all of them in one investment. It's a basket of stocks. For me personally, I like dividends, which is money you get from just owning stocks. Not every company pays a dividend, so that's why I buy SCHD, the Schwab US Dividend Equity ETF, which focuses on multiple high-quality dividend-paying stocks and rebalances the positions every so often, all on its own. So of the $5 I'm investing daily, 2 of them are going to SCHD. And since I started daily investing, I've added almost 20 shares of SCHD to my portfolio with an average price of $26.42. This happened automatically. I put the money in, set up the daily buy, and let Robinhood do its thing. SCHD is my largest position in this portfolio, and I've been buying it for quite a bit of time now, not just for my daily investing, but in lump sums as well. And all of those shares I've accumulated over time will pay me almost $100 in December just for owning them, which I will be reinvesting to buy more shares, which will eventually pay me more dividends, which I'll then reinvest, and the dividend snowballs continues to grow. Infinite money loop. Of course, there's 3 other dollars to account for, and all of those went to crypto. The $1 a day I put into Bitcoin just turned into 0.0067 BTC, and I'm up 71%. My average price paid is about $58,000 per Bitcoin, and it's currently over $100,000. The $1 a day I put into Ethereum turned into 0.14 ETH, and I'm up 36%. On average, I paid around $2,800 per coin, and ETH is now trading at $3,800. And finally, Dogecoin. My daily dollar buys have gotten me 3,219 Doge, and I am up 235%. On average, I paid 12 cents per Doge, and it's now worth 40 cents. So in total, I invested $1,696.13, and those positions combined are now worth over $3,000. Not bad for doing nothing. investing. But the thing is, it took me a long time to actually get started daily investing. So you might be in a position like I was. For some reason, you just can't quite do it yet. Here's my secret. How I got myself to finally getting started in daily investing was just moving the money into the Robinhood app and setting up the daily buys. The secret was doing the things. Yes, stabilizing my income, securing my savings account, making some switches in what I buy regularly, finding the data to prove that long-term this was a good idea were all necessary, but actually moving the money into the Robinhood app with the intention of investing for a year was the last step. I committed my money to investing, so it's not in my bank account, liable to be spent. It's just out of sight, out of mind, set and forget. And because I was investing small amounts daily, if I really needed the money sometime during the year, I can always take it out and put it back into my bank account. And because I was buying liquid assets, worst case scenario, I would sell, maybe for a loss, but I would still have something to work with if the worst case scenario came around and I needed the money. Robinhood also pays interest on your uninvested cash, so you can earn while you're waiting for the days to go by. If you want to commit $1 a day for the next year, it's going to cost you $365, and at the end of that 1 year, you can make a video like this for your YouTube channel. Let me know what you're buying.